Good morning, traders around the world. Good evening, good afternoon, wherever you are in the world. This is Trading Capital Markets. I'm Phil V, and we are currently. Let me share my screen. Webcam's not working this morning. I don't know why it's giving me a hard time. So we are currently 9:36 a.m. 6 minutes past open. If you go and watch my pre-market analysis, I have a big downward bias for today or Friday. Usually people don't like keeping their positions in uncertain conditions. We have tariffs, maybe tariffs news over the weekends. So I think people are going to be dumping today. Okay. And so, yeah, we have buy side and we have sell side over here. That if we take one of these, then that's the direction I'm going to be taking. We got to trade the plan. Trade the plan. So I'm trading a little bit more conservative today because it's Friday. Had a great week. So yeah, let's stay safe, keep our money, preservation of capital, and be on top of that risk management. These are the types of opens I like to see. So an open that is coupled with a fair value gap. It's a 9:30 open. Double fair value gap stacked, one on top of the other. Two SIBIs and two relative equal lows formed after those SIBIs. I would have shorted right here, but I'm going to follow the plan, which is a trade above here and a trade below here. But ideally, I would have shorted in here if I didn't keep those rules for the Friday. I would have shorted right here. So let's see. What I would have done is this. Let's put it on the screen. So I would have shorted it right here. I would have put the stop loss right above the 50 per the consequent encroachment of the top candle, and I would have taken this trade all the way to this 15-minute fair value gap. So it's a 2.87 to 1. Now, that said, okay, that said, I see this type of breaker block over here. Right here. And that's going to be in green. So that would be the entry. And this would be the exit. And that would be the stop loss. Right here. So let's put it here. Entry at that breaker right here. Yeah, right on it. Boom. Stop loss above that down move and take profit over here. So that's a 3.73 to 1. Now let's see what we got. There you go. That's the breaker block right there. I'm gonna wait for these equal lows to get taken, and it's probably gonna give some juice to go right to this 15-minute fair value gap where I think it's gonna bounce. Let's see. Let's see. All right, so let's see. See what we got. What we got. Okay, so let's go finding the first presented fair value gap, which is probably this one. Is it this one or that one? No, it's 23. Yeah, this one. First percentage fair value gaps right here. And that's, ladies and gentlemen, traders around the world, that is why you trade your plan. So when I started this video, I said a break above this, I'll start going long, and then a short below this, I'll start going short because we are still in this price leg, right? We're still in this price leg, and we're trying to decide whether we break market structure, we go back up, or we continue to go down. That's why you follow your plan. You see, it's a lot of impulse control in trading. You have to control your impulses. Back when I was younger, I would have take I would have taken this trade, and my I would have completely forgot my plan because of the not even the FOMO. It's just like a hunger of wanting to make something. But the point of trading is you have to be patient and you have to let that something come to you. It's like cherry picking, literally. You just have to wait it out, and you will be fine at the end of the day. Okay, so first presented fair value gap is this one. Wait, let me go see if there's a volume imbalance because I think there might be. Yeah, there is a volume imbalance right here. So that means we have to take not the wick, but all the way to the body, stretch it out, and paint it in purple because it's the first presented fair value gap. Purple. I'm going to extend this breaker a little bit to the right because it could act as a zone of support for the price to bounce. So it's like at an order block. That's crazy. So it's like at an order block and a breaker. Maybe I should put breakers in red. Breakers in red, order blocks in green. Yeah, I think that's what I'm going to do. So I already had my order blocks in green, breakers in red. Stopped at the consequent encroachment of this order block. Bodies below. Now expecting a bounce off this breaker. Digging into this fair value gap. maybe right here. And it's going to be a balanced price range. Gotta stay patient. That was a nice one, really nice one. That's why I put the arrow. I was like, I'm not taking it. It's not my plan, but it was a very nice setup. Because look at that. From the consequent encroachment to where price is at now, it is, let's go to the price range calculator. Where's that price range? So I got from here, from this low, all the way to where it is now. That's 74 points. 74 points on one lot is 1,400 USD. How many of you make 1,400 USD in a day? Exactly. Little moves, but well, little moves relative to the moves we've had previously, but still. And to the target is 132 points. Okay, 132 points is, so we got 640 plus 2,000, $2,640. How do you like them apples? And watch this. Even now, like look to the top of this order block. That's 2,000. That's 2,200. That's 0.7% of the daily move. Okay. So right now, stops would be right here, below here. Okay. If I would have entered this trade, my stop would be below this candle. And that would be how many points? That's 43 points. Guys, that's $860 US on one lot. If it hits there, you're fine. Look, boom, it just hit you. You're out. You're out with $860 in a day. What do I mean in a day? Let's see. in literally 25 minutes of trading from 9:30 till now. It's pretty good. Pretty good, I would say. But if you would have been active managing it, like, because I just hopped in and put the stop loss here, what I usually do is once the high is taken, I trail the candles lows. So let's say this one closes here, then I put it here. And then this one closes here, then I would have put it here. So it would have been a bit more. But ultimately, I think it's still going to this target. You know, you could have even put a break even, not lose anything today, not gain anything, and take that big piece of cake if ever it went there. And it's a Friday. It was a no stress trade. Goes back here, takes this high, put a break even, and that's it. Stops would have been right here. So let's see. On a with a order long position simulation, so the consequent encroachment of this um, here. This is the target. This is a stop. It's a 3 to 1. 3 to 1 risk reward with a trail. So you would have trailed it all the way till here. Or if you're willing to take the L on a Friday or whatever, you keep your stop loss at the same place. You don't trail your stops, okay? And you just go for this ultimate target right here. But that was a nice setup. It was a break in market structure within this leg, right? Break in market structure. So let's do it. Let's do it for the sake of you guys learning or not learning, just being entertained. Okay, so we have this, and then we have this over here. Boom. See that? No break of a body below this wick, so I don't count it as a market structure shift. So, and even if it was, you could do this. So take it off, do this, go from here to 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 here, and there's your shift. When this high goes above and this candle breaks above, right? So when this candle breaks it, after that, this candle closes above it. And you take it back on that breaker, and this seems to be another breaker stacked. So one bearish breaker, one bullish breaker. Boom, bang. And on top of that, you have this wick, which is coming back into a balanced price range from here to here, here. Look, the top of this wick would have been the entry. Boop. But I like trailing stops. It's really part of getting wiser, trailing stops, I think, I find. Because some moves, yes, there's a lot of momentum. So when you trail the stops, it just keeps on going, right? So you get a major part of the move. But but when it's not gonna do like a full move, So let's say here. Let's say we would have taken a long over here. Okay, so let's take this one off. Well, let's keep this line as a price where we could see where the stop would have been. Okay, let's take this one off. So you're trading, right? Take this market structure off because I just explained it. Okay, you're trading. So let's say you take this fair value gap. Okay, you buy into it. On top of it's the first presented fair value gap. Body's respected the low of that fair value gap, first presented fair value gap zone. So you buy it right here at the high. Okay. I'll give you both scenarios where you trail. You see, you would got stopped out and I would have trailed. I would have trailed and I would have taken 43 points, 860 US dollars. That's why you trail. Second of all, earlier, if you would have taken this long, let's take it, let's do a little simulation, take this long, okay? Your targets would have been, let's say, here, okay? That would have been your first target. Let's take these inversions off because they're annoying. Clean the chart up. Perfect. And this would have been your stop right here. Okay. I could even possibly go higher. So this would have been your take profit to go get the liquidity, not the minor, but the medium. And you get in, right? You get in, breaks the high, then you trail. When it broke the high, closed here, you trail. So your stop loss would have been here. Let me show it with a line that moves, like this one, the one that we put over here. So once this breaks this high, right, you trail at the bottom of the wick of that candle. After that, this candle closes green, consecutive, you trail. You trail, you put it here. This candle doesn't stop you out. You see that? This candle doesn't stop you out. And on top of that, you're what? How many points in profit? Let's take that price range. So from here to here, 54 points. That's $1,080 US. Okay. So now you're trailing. This one doesn't take you out, and you can see it right here. Doesn't take you out. Closes above. Great. You're trailing. Boom. Doesn't take you out. Closes above over here. Great. You trail. Boom. Over here. Now we're going to be at how many points? You're trailing at 88 points. That's $1,600 US. Okay. After that, this closes green above. Bam. Guess where you trail? You trail again. You trail all the way till that point right here. And boom, you get stopped out over here. But that's 121 points. That's amazing. That's $1,400. $2,400. $2,400. That's nuts. And that's only on one lot. Imagine when you're scaling up, how good it gets. That's just for perspective. So it's important to trail your stops, whether you're trying to get that big move or not. And it's important you know how to trail your stops. So now we have a bounce on the. Okay, we have another break over here. Let's go. Let's go. Let's show you guys. Boom, boom, boom. There's the breaker. Bam. You're going to see it bounce off and probably go lower. This is one tick away. That's a breaker. Breakers are in red. let's move this breaker to the left. Like that, we could see this one properly. That was one takeaway. And it's pretty much balanced price. Bearish breaker, boom. Last candle before taking the highs, traded below, almost got to it. You could have entered even if one tick lower. It's all right. And stops above here. Targets below here. Relative equal lows. Okay, let's do that simulation again. Do that simulation. We put it here. Stops above the breaker right here. Targets below right here. Now let's start. You're going to be fighting between the first presented fair value gap and a breaker. I think what's stronger is it might be the first presented fair value gap. I have to look that one up when they're like stacked one over the other like this. So you're getting a bunch of signals, a bunch of signals while you're trading. Boom, bang, boom, bang. You don't want to take them all. And then you want to trade your plan, right? You want to trade your plan. So my plan initially when I came into this day, Friday, boom, you see that? Taken your stop by one tick. Hilarious. So my plan initially when I came into this day, and you see, let's say first presented fair value gap is stronger than this breaker. Okay. So the plan was, this was before I placed it, but the plan is above here. So see, this is buy side. This is the buy side that's going to change the market structure, the larger market structure. Okay. We're still stuck in this price leg right in the middle. So, I mean, you could even actually stretch a fib over here. Stretch a fib over here. Stretch a fib and put it all the way down. Boom to here. Bam. Okay. Stretch a fib, extend lines right. When it reaches 75, it's at the premium of the leg. When it reaches 25, it's at the discount of the leg. And this is equilibrium. So you see from here, equilibrium, that's where moves start. Boom, up, boom, down, here. Look, it uses it, bounces off of it, comes back, extends to 75. So that's where it bounces off of, equilibrium. Wow, this is really a nice session for learning. Nice session for learning. Do we have any economic news today? No, we don't have anything. We didn't have anything. Oh yeah, PPI this morning. PPI this morning at 8:30. That's unbelievable. Donald Trump is doing an amazing job in the United States so far. Producer price indexes are down. The forecast was 0.2% up, like in the positive. It's at minus 0.4%. This guy's a legend. All the inflation, everything. Core PPI is down year over year, month over month. Then PPI month over month is down, and by a lot. And PPI year over year is down by a lot, by 0.6%. That's amazing. Boom. Back at the order block. Came back down. Nice push. So now we have balanced price range. Up, down, right? Showing you all of the types of trades you can make. So now we can use this as an inversion. Over here to there. Do this. Inversion. Bam. Enter this short over here. Let's enter short. What is it? Short. Enter short right here. Stops above here. Target below here. Here, we'll take a 1.5 to 1. Okay. This is going to be, so on this, we would have taken 43 points. This minus, if we would have taken that breaker, this one, and went short, minus 75, I think. Now we're going to take plus 162. So 75, 30, 30, 162. It's going to be 130 points up if we take this sell side. Or else it's going to be 130 points down, you know? But at the same time, it's ping-ponging. It's ping-ponging you away, taking all your money because you don't trade your plan. Look how indecisive this is. This is a, and as we said in pre-market, right? If you guys watched pre-market analysis of the Nasdaq, I post every day at 9. You will see that we described today as consolidation day, right? Because let's take it back a little bit. Let's take it back and show you why. So we have manipulation, right? That tweet from Trump. Let's take this and put a little less. No, it's fine. So we have that tweet from Trump. Okay. Oh yeah, I could do this. Hide drawings. Boom. Perfect. Tweet from Trump. Manipulation, right? Distribution of that manipulation. And then what? After that distribution, that fair distribution, because it went even below the consequent encroachment of that news. Consolidation. Isn't it impressive? Accumulation, manipulation, distribution. You know, this is accumulation. Accumulation, back, down, range, down, up, down. So they're accumulating longs. Rip, manipulation. And then boom, distribution. Taking profits, taking profits. That's why price is going down from this huge move. So it's important, you know, in what type of scenario you're in. Today, you'll get ping-ponged around because you're in accumulation. You see? So that's why it's important on accumulation days. You identify what's the high that needs to be taken and what's the low that needs to be taken. Oops, let's go back one. Take this, take that off. Have buy side here, sell side here. So that's the high that needs to be taken, and that's the low that needs to be taken. Or you just don't trade today, like I'm doing, you know? So here, let me put our our three trades, because this is the third one. Let me put the three trades we took. Okay, so we took um yeah, we had wait, let's just go back a bit. Book, book. Yeah, perfect. So we had this. Nope, we had this long that we took over here, right? And we trailed. If I would have been trailing actively, I would have shown you. So if I would have trailed actively, it would have been from here, okay, from here, and I would have trailed till here, right? So it would have been 79 points, okay? 79 points if I would have trailed actively. 79 points, and this would have been the stop. So it's a 1.7 to 1. Great. That would have been an active trailing scenario. And I always active trail when I'm in trades. After that, we took this breaker over here, and we went short on it right here. So let's go again. Let's take that and let's go again. Okay. Then I went short on that breaker over here. Take this, all right? Stretch it over here. Come down a little bit. Wait, I'll put it over here, then I'll move it. Perfect. Okay, and I had my stop right above that high. That high, and it was at this low. So that was 72 points. I got stopped out. Okay. Then after that, we used this bounce price range, and I used this as an inversion. This fair value gap up, went straight through, used it as an inversion, and went short. So right here, I have 79.9 up, 72.9 down. That means we are 7 points, 6 point whatever, 6.8 points. 6.8 points. After that, we shorted over here for 6.8 points and 103 points open profit with a target of 162. So that's going to be 168 points total for the day if I would have traded within this. And why I put this over the high? Because over here we had a change in structure. Within this own leg, we had a change in structure. We gapped below on top of it. So we had this new high, but then we broke below this low, right? So we're changing the structure. This one didn't go up top over this one. And now we're almost at our take profit to these relative equal lows. And we have taken profit. 162 points plus these 8 points that were 8 or 7, no, 6 points that were left over here from this trade difference. And we're up 168.5 points. That's $3,200 US on one lot. That's how you trade the consolidation, but I didn't want to trade it today. Yeah, let's do that little inner leg market structure, interleg. Show you guys. So this to here, right? This didn't pass. Okay, so since this didn't pass, here, 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 and here. You see, guys, how market structure changes? Okay, and that's price action. For you, here to here, right? Where does it break it? Doesn't break it on this one, breaks it on this one, closes above over here, right? This candle closes above this high, change in market structure. But within this leg didn't get passed over here. So you see a confirmation of this leg's downtrend over here when we have another break in market structure towards the side that this leg was headed to. Over here, we broke below that low, so the new high, but a new high, but a new low, right? And then we have a lower high, a higher low, but then a lower high and a lower low. So that's pretty much how you trade consolidation. Is you really check the market structure. But pretty simple. Boom. 3 trades. These ones neutralize themselves with a little bit of residual profit. 6 point whatever points. And this is 162 points for a total of 168 points. Didn't take it because I want to trade my plan. Staying disciplined. Discipline is everything in this game. If you don't control your impulses, you're dead. You're toast. So on that note, guys, I don't see it taking this liquidity, this sell side liquidity or buy side before 10:30. So I'm gonna stop trading right here, and I'm gonna enjoy the rest of my Friday. I hope you guys like and subscribe. Turn the notification bell on, like that you receive all my videos, and yeah, on the lives and pre-market analysis of the Nasdaq. Cheers. Have a good day, traders. Stay safe out there, and remember, risk management is everything. Control your impulses, you'll control your wallet. Have a great day.